They say that the stock market moves up a staircase and down an elevator. Welcome to the Option Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you, so get yourself a drink, sit back, and relax because we have a lot to talk about. Now, in today's trading session of June 21st, 2023, we've seen a major move in the stock market, and we've seen the tech-heavy sector, the QQQs, or also known as NASDAQ, suffer a major loss. And this was to be expected in our previous video if you've been watching along. And also, please make sure that you subscribe so that way you can get our future videos whenever they're released. In our previous video, we've identified a major resistance point. Back here in March of 2022, we've identified that a major resistance point was already in place. We've seen it back here in March, also in January of 2022 at the 371-ish level. Now, we've seen the market react quite positively in terms of its confirmation that the prior weeks tested that level and rejected it. And now we're sitting just within the previous week's trading range. I would say we're about 50% in of the prior week's trading range. And so the question now is, will this downturn continue? Now, there's several things that we have to identify. And I want to say that the better way to look at this is to zoom in to the daily chart. Now, this is a third day down, and we've seen major indicators flashing us a signal to pay attention. What we have here is the MACD indicator, which is primarily also known as a momentum indicator. And we can see it for the first time in a long time to finally roll over. We haven't gone there yet, but in the next few trading days, it is more than likely, especially with today's close, that we are more than likely gonna break right through. And if it does, then it will signify a momentum shift in the market. Additionally, we have seen the RSI continuously overbought, and finally we've reached the peak here, and the market react in the favor of the bears to roll over. And so will this trend downward continue? That is yet to be said, and the major important thing here to note is major key levels of support. So the best way to do that, because we've been in a major uptrend, we have several things that we could look at. We can look at the 15 moving exponential moving average. Currently, the daily exponential moving average for the 15 is at the 358 level. So this could act as a support. However, it is conflicted with the major indicators that we are looking at. So will it hold this 15? In my opinion, I do not think so. However, we cannot predict, but it's always good to have some sort of assumption towards the market. But if it does not hold, we have to look at major support levels. So what can we identify here? So zooming in, if we expand this here and pull out our price level tool, we can take this major support here, the 350 level on the QQQs. This has been quite positively respected back here in October of 2021. Additionally, in July of 2021. However, it's not so strong within the 2022 year that has really reacted quite positively to hold. Now, another area of support would be this 333 level, which ultimately lies right on the 15 moving exponential moving average for the weekly chart. So this is in my opinion, would be a better bet if the market were to trade down, that this area would be a strong level of support. Now, what we also have noticed here is that we are not seeing a crossover on the weekly MACD, so the momentum here is still strong. So really all we can do here at this point is to watch price levels on the market, see how the market will trade on each level, and however it reacts is how you will get in and choose the direction of the trade. Now, looking at the S&P 500, we've identified, again, on the weekly chart, major resistance level. Now, we haven't traded up to the resistance level point that we've identified in our previous video of 450-ish, 449. We haven't reached that point yet. Now, the weekly MACD is still flashing a strong momentum to the upside, and we do not have an overbought reading on the SPY. So this trade can be a stronger trading ETF compared to the QQQs if the trend will continue. However, we are currently also trading within, I would say, 50% of the previous week's trading range. And if the market were to turn down and follow along with the Qs, a good trading level of support would be this 431-ish level. And again, if we're trying to find a stronger level of support, which would be aligned to the 15 moving exponential moving average, which would be 420-ish level. So this level here aligns with this point here, which was previously a resistance point. But you can see a lot of interactions back here in 2022 where it acted as a level of support. So these are the levels that we are looking at currently with the current market price action. If we're looking at both the SPYs and the QQQs. Now, taking a look at the VIX, despite the move down in the market, which was which caught a lot of investors, especially on the tech sector, what we saw on the VIX was a move down, which signifies a collapse in volatility. So this is almost of a divergence. When we are seeing the VIX move down and the market move down, that could go either way at this point. We could see a move higher on both SPY and QQs within the next few trading days, as the VIX is starting to identify that there is no need to worry, there's no need to panic. So when we say that the market moves down like an elevator, we may not see that here at this point. Again, we have earnings right around the corner for Q2, and Q2 is going to be a major reporting piece of data in the overall market because, as we know, especially in the tech sector, there's been massive amounts of layoffs due to overhiring within the tech sector because the whole purpose of overhiring was to keep up with the demand because people saw that the demand was in need. And at this point in time, we have conflicting data points such as a lower CPI and a Fed pause. So it is hard to say where we are headed in the market. But if we're looking at the volatility in the VIX, it is telling us that volatility is not there and there's no need to panic. So more than ever, if we're looking at the VIX alone, it could mean that this pullback in the S&P 500 and the Nasdaq is a buying opportunity and there's more room to the upside. So that is what I have for today. If you guys like my analysis and the technical analysis that I provided for you for the S&P 500 and the QQQs, go ahead and hit the like button. Also subscribe to this channel. Let's get this channel going. And again, we'll see you on the next one. Peace.